Good morning, welcome to Nifty Prediction. My name is Narendran. To join my WhatsApp group, I'm charging 500 rupees per month. You will get advanced prediction details as well as calls in the group. If you like my research, if you want to support my research, you can donate me using this Google Pay and Phone Pay and Paytm. Let's go to the prediction for Monday. The data is showing bit kind of a volatile. Two indicators are in the negative, one is on the positive, which means if the pre-opening is in the positive some 80, 90, 100 points, we still have a potential to go somewhere around 0.46%, which is 143 points on the positive direction. And one more indication shows the volatile, which is difference of 1 point. So one is indicating volatile market and the other two is indicating bearish, and the another one is indicating bullish, which means it is typically a volatile market. But still, what kind of a volatile market we need to check out, because these are all the levels which shows if the extreme volatile means it has a potential to go 143 positive to negative, which is 175. So extreme volatile, so it might open in the positive to negative and then oscillate and then fall down heavily like this, trending towards to negative. This is the one kind of a thing. If the market is opens somewhere in the positive 80, 90 points, then it will go towards to some positive and keep the high 95 to 143 somewhere in the high, and then start to fall down rapidly fast towards to the negative. This is the one kind of a scenario. This is the extreme volatile we can talk about. On the other hand, the market might open somewhere and in the flattish kind of range, which is V1, which is more than 3 point. Anything more than 3.17, the market might go towards the positive, but still it has oscillate bit. And the range, it might not come down towards to negative. Then once again, it will go towards to extremely bullish. It will go even 200 to 300 points in the positive. This is the another kind of volatile market, but it might not come down and touch the negative side. The volatile happens in the positive direction itself. It will give up the points from 80 to 100 towards to flat, and then once again it will go towards to extremely bullish. This is the another kind of a volatile. And the third kind of a volatile, which if the market opens somewhere around in the range of 50 to 95 points, straight away it start to give up its points and then come down towards to 80, 88 points in the negative. Then once again it will go towards to positive and stay in the flat range. This is the another kind of volatile, which means both sides it has a potential to go some 100 points in the range and oscillate in between those levels. So around V2 to bullish open target level, it will go oscillate in between those levels. And the rest of the volatile, which is very less likely to happen, the market might open in the negative, because as per right now the situation is looks like it will open somewhere around 50 points to 100 points in the positive direction. It will open up in the positive direction. But the fourth scenario which I'm talking about, the pre-opening is in the negative, somewhere even 1 points to some negative, but it might not even break the 10 points or even frequency level 13 points. It will go flat positive and then fall down heavily on the negative. This is the scenario which less likely to happen, because right now the SGS Nifty is showing somewhere around the positive pre-opening. But still we need to know about this kind of a pre-opening. If the market is opens in the negative side, it has a potential to keep somewhere 10, 15 or less than that, keeping high and then fall down heavily as well. This is the fourth scenario. So all three, all four scenario you need to know, because the V1 and V2 is the important indicator for us, because anything below the V2 the market will go heavily down. Anything above the V1, which is the bullish market, but still due to volatile market after the positive average, it might having the potential to resist towards to negative average, try to fall down towards to negative average. On the other hand, the bullish market might have continue if this particular level is breaking. For example, 16,848 plus 10 points. That is a stop loss we need to maintain. 16,858.86. This is the key level. If this particular level is not breaking, then the market will fall down. If this particular level is breaking, then we have another target which is opens to above, which is 17,042.65. This is too much points. from this particular level, almost 180 190 points, market will go up, it is showing. But it will open the new target, but whether it is going to hit on the same day, we need to watch out, because this particular level is breaking, then the new target for the positive side will get open. So we need to play much more cautiously. This particular level is not breaking, then that is fine. If it is breaking, then this new target will open. And on the downside, we will check out what are the indicators showing. So it is clearly that flattish, we have the strong support level. If those strong support level is breaking, then the market will fall down just like that, 49 107 and then 221. So which means rapidly it will go downside. So anything on the bearish, if it is touching today, it will go rapidly fast. So you keep small put option, 10 rupees options always in hand. It will be a good worthwhile, because we have a 80% target, which is around 168 points. Bearish open target level 101, which is we are having a target around 16,536 as well, but that is only will get effect if the P opening is in negative. But P opening is in the positive means sometimes it will not get effect, so the chances become 50-50. So that is the reason we don't want to bet huge, but we want to keep some small put option always in, and 10 rupees it might go. If it is goes heavily from the positive 100 points or 145 points to negative around 200 points, you will get 10 rupees put option will go some 50-60 rupees or even more than that. So that is the reason we want to play safe. We don't want to bet huge amount. And the closing market situations are showing that both sides having heavily positive side around 300 points, negative side around 200 points. The average is showing somewhere around 16,757, which is in the some positive 50 points. And the scenario what it shows, the closing with the indicator percentage, anything in the range of 70 to 0, which is the stable market, which is 16,779 to 16,705, which is the stable market. But it might go bullish or it might go bearish, but anything above 148 is strong bullish market. Anything below 48 is the strong bearish market. So all we need to watch out is for anything above 74, the market will try to go up, and anything below the 0, anything below negative, it will try to go down. So we need to watch out these ranges as well. And these are all the closing scenarios for the extreme bullish and the extreme bearish. So extreme bullish, if this happens, even 500 points is possible today. So that is important, you need to know. And extreme bearish is 400. So there is not much difference. So we need to watch out how it is going to be. But the mid-range bullish, which shows 371, that is also I'm a little bit doubtful. We can expect a flat bullish 170 range to flat bearish to mid bearish. So these ranges 170 to 233, these ranges we can expect market might go towards to and fall down. This kind of a possibility is there, but still there are potential to go extremely bullish as well. 500 points, all we need to know how the low is matching. If the lower side is not keeping negative side, means it has a potential to go extremely bullish as well. So we need to know those things. But those are all the things which having the less likely to happen. But around 170 positive to negative side around 233, which is more reliable or maybe easy to happen. Let's see how the market is going to give us one shine. I'll show you the support and resistance levels. These are all the support and resistance levels. We have the pivot level there in the 75 points, the negative around 16,630. So if 16,630 is also not breaking, then the market will having potential to recover as well. But still, anything negative side, the market will attract much more bearish. So we may not know how far it will go on the negative side once if it is reaching. So it is very headache moment for us, because whether we want to book the profit in the put option or we shall wait for the more profit. So it is quite tricky. So you can buy a 100 call like that, leave it, or buy 2 lots and book one profit and hold 1 lot at risk, so that it will be protecting your fund. Let's see how the market is going to give us on Monday. Thank you.